Hello, folks. This is Tony Drake from Wealth, Wisconsin with a March 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic events that occurred last month and give you some insight as to what they mean for you as an investor. Please stay tuned at the end for a required disclosure statement. The Federal Reserve and interest rates dominated economic headlines last month. To support the economy, the Fed has kept interest rates at historically low levels since 2008. Since bond buying operations ended last October, the next step will be to start slowly raising interest rates to quote-unquote normal levels to prevent inflation from getting out of hand. After the March Open Market Committee, Federal Chair Janet Yellen announced that the Fed is moving away from a patient interest rate policy and will start thinking about raising rates this year. Though we don't have a date yet, many analysts think that rate hikes could come early as mid-June. Though investors are getting nervous about higher interest rates, we know that the Fed will move carefully to avoid damaging the economy. Speaking of the economy, we also got a look at the final fourth quarter gross domestic product reading, which showed that the economy cooled in the last 3 months of 2014, growing just 2.2%. This brings the overall economic growth to 2.4%, up from 2.2% in 2013. Investors care about GDP because it's our most comprehensive economic scorecard and shows us at a glance how the economy is doing. The relationship isn't simple. Healthy economic growth generally translates into strong corporate profits. All else being equal, strong profits usually boost markets. Digging deeper into the data, we see that strong consumer spending exports and business investment supported the economy. The growth rate decreases because of higher imports and lower federal government spending. To translate all of that into plain English for you, the economy was fundamentally on very stable footing at the end of the year. Though we don't have first quarter GDP numbers yet, clearly, the Fed feels comfortable enough about the economy to think about taking away the training wheels. Looking ahead, as the first quarter ends, investors will turn their attention to corporate earnings reports to find out how U.S. companies performed. Right now, overall expectations are lower because of weak overseas demand, low oil prices, and a cold winter. Since leadership teams like to underpromise and overdeliver, we can hope for some positive earnings surprises. We know more is coming in the next few weeks. That's it for the March Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please let us know by visiting our website, wealthwisconsin.com, for contact information. If you'd like to know more about any of our upcoming events, you'll also find information on Social Security workshops and college courses we teach in the area on our website. Lastly, I'm very excited to announce the launch of our new radio show on 6:20 a.m. WTMJ, The Retirement Ready Show. It airs every Saturday from 1 to 2 and will cover a wide range of topics. Join us live and feel free to call in if you have any questions. Once again, this is Tony Drake with wealthwisconsin.com signing off for the month of 2015 in March. Please remember that nothing talked about here is a recommendation. If you'd like to discuss your personal financial situation, visit our website for contact information. We'd be happy to talk to you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Thanks.